my everyday profit system, I think will be very appealing to a large number of you. We've been talking about intraday trading. The idea of making money every day is something that we pursue all the time in my trading room. Again, my name is Dave Aquino. I'm the Stocks and Options Live Trading Room Specialist at ValueCharts.com. I've been doing daily trading in front of a live audience with our Platinum members for over 28 months. So when I show you something, it's because we've been consistently performing high-quality trading setups every single trading day in the Stocks and Options Live Trading Room. What's interesting too is the strategy that I'm going to talk about today is actually very compact. It's a way of seeing the market that allows you to understand the flow of the day and the opportunities throughout the day for you to make money on a consistent basis. So again, thank you for staying around. Let's go ahead and jump right in here. Okay? Now, feel free to ask questions at any time. If I don't immediately answer it, it's probably because I'm going to answer it later on in the presentation. If not, I'll catch it towards the end of the presentation, and that way I'll make sure I get everybody's questions answered. Okay? All right. So again, this is our standard risk disclaimer. We want you to know the information we're going to present to you today is for the sole purpose of helping you your trading education and helping you make your own investment decisions. Again, we've done our best to ensure the quality of the information we're going to show you, but also know that we're not making any representation that any account will profit from those, and most importantly, past performance of any trading system or methodology is not necessarily indicative of future results. Okay, so the next one is CFTC Rule 4.41. I'm not going to read this to you. It's basically the same information. Okay? So, again, a little bit more information about me. Reed alluded to, I graduated from Vanderbilt at 23, General Securities Series 7 licensed broker with Merrill Lynch for about 5.5 years. I joined the Vanguard Group in the Senior Asset Management Service Advisor for ultra-high net worth family groups. My job was to generate income on highly appreciated stock portfolios for our very rich clients. It's been a while since I've actually used this slide, so I apologize. That was 6 months ago, so I've been doing this for 28 months. And we actually have a very active and lively trading room. It's well organized, and we really like to, what I say is, enjoy experiencing the daily market together in the trading room. So the points that I want to touch on today for my Everyday Profits program is, first question, why should you trade intraday? What benefits do you have in trading intraday? How much money can you make a day? That's a practical question. If I'm going to take the time to trade intraday, what is possible? And then, now that you see what are the benefits, how much you can make a day, how do you do it? What are the rules that I should follow for great intraday trading? Okay? And I'm going to show you proof from our trading room, and I'm actually, if I have some time at the end, show you some live trading room examples from today. We'll start it today. We'll go back a couple of days if you want to see that too, and we'll show you that this stuff actually works extremely consistently almost every single trading day. Okay? Oh, some more points. I forgot. What trade setups work? What time of day? What does the setup look like? Is it once a week? Is it twice a week? I'm more likely to say it's sometimes 4 to 5 times a week. That's very, very easily done. I'm going to show you a trade setup I call the Magic Box. It's very interesting. And it basically, the way the setup works, it's almost like magic some days. I'm going to talk about the mid-morning reversal. It is a type of time-based setup that we look for every day, and it's amazing how you can really make money just by watching the clock every morning. And there are multiple setups throughout the day, that these things repeat, and we experience them together in the trading room. And I'll show you proof of that also. We're going to talk quickly about gauging the strength of the market, knowing the market's mood. Is it something that is range bound? Is it something that's breaking out with a trend? How do the days kind of fit together as they go along in the week? So we'll talk more about that too. All right, so I want to ask you a personal question. I'm going to give you information. I want you to give me some information just off the bat, and it's not so much for me. It's actually more so for you. How much money do you make? Specifically, how much money do you make every single day? If you have a job, if you have retirement income, if you actually trade intraday and that's your livelihood, how much do you make every day? You can type it into the questions box if you want. I want you to write it down on a piece of paper because I'm going to help you figure it out, because you might be thinking pie in the sky number, but let's talk about it from this standpoint. How much do you make? Is this being reported to the IRS? Trust me. It's between you and me and the questions box. But what is your monthly income? This is how you figure it out really quick. Back of the napkin type of calculation. Now whatever that monthly income is, divide it by 22. That's the average number of working days every month. Some of us feel like it's more than that, but 22. That number is your daily income, just roughly. We used to call it bringing home the bacon. So what is your daily bacon? What is the amount that you put in your pocket? And we're not worried about taxes because we want to see what that number is. If your yearly income is $30,000, okay, that's your salary. Take that number, divide it by 22. Oh, I'm sorry. $30,000 a year is roughly $2,500 a month. That $2,500 a month actually breaks down to $114 a day. If I know my son is buying shoes for his basketball league, his high top shoes cost more than that yesterday. I remember I was amazed. I'm like, did you have to buy the one over $100? That's the one that the team's using. So that's your daily income. $114 a day for $30,000 a year. Doesn't seem like much. That number is very important because I'm going to ask you a question at the end. What would it be worth for you to boost that number by $50 a day or $100 a day or whatever amount you would like to see it be? So keep that in mind. $114 a day if you're making roughly $33,000 a year. Okay? Let's jump right in. Thank you for sharing, everybody. That's a really generous thing that you did. Okay, well, what trade intraday? What benefits? Let's jump right into it. Trading every day is a very interesting experience because what happens is the markets have an ebb and flow. You see how news events and economic events and earnings and how the markets kind of react to previous days and different things in the news cycle. So every day actually is nice because it's a new experience and in a lot of different ways. One thing though that's similar, just like when you go to work, you actually have, a routine. You get ready in the morning, you drive to work, you pick up your Starbucks, you get to the office, you check your email, you talk to your coworkers, you start your day, you plan your lunch, go to lunch at Burger King, come back in, work some more, wrap up the day, drive home, get home, have dinner, watch TV, and go to bed. Does that not sound like 90% of the United States working population? Doesn't that sound like that's what we do? We don't think about it. It's our routine. Guess what? The stock markets also have a routine. Now, sometimes they're disrupted by all these different events, but in general, every single day follows a general script. Okay? One thing that we also benefit from is the fact that if you trade intraday, you know if you made money that day. You either have more money than you came with, or you have less money than you came with. But at the end of the day, you know what it is. Now, the Everyday Profits program is designed so that you have money in your pockets. That's kind of the goal. I have one trader, she's 82 years old. That's what she tells me. She's 82. She trades with 12 monitors. This is what she does, and she calls it her grocery money. Okay? She takes these trades with me. That's her grocery money. Okay? And one thing that she especially likes, and I like too, there's no overnight exposure risk. You're not worried about a fund manager or Carl Icahn tweeting about Apple or Netflix or Priceline. You don't worry about an analyst upgrade or downgrade. You have no exposure risk to a position while you can't actively do something about it right then. So that's another benefit of intraday trading. All right. So again, let's talk about how much can you make in a day. All right. Let's say, again, I said earlier, every day is different, but every trading day is similar. That's the essence of everyday profits. Again, I talked about a normal trading day, but a normal work day. A normal trading day follows a similar pattern. We have an active morning period, followed by, well, in that active morning period, sometimes you get what we call consistent range-bound trading. If it's that kind of day where the markets kind of just flow up and down between the high of the day and the low of the day, we call that consistent range-bound type of trades. And there's a very simple, straightforward way to trade those days. And then we have days in which there might be a news event driven, or maybe the markets have found resistance or support, in which they have a breakout move from the typical range-bound day, and it tends to run. Today was very interesting because the very first part of the morning period was range-bound, and all of a sudden we got a breakout to the upside. And then we have a little bit of range-boundness at the end of the day. And I will show you that because it was very interesting type of moving. Here is the morning period. You can see we have movement up and down. We finish this time period here, and then we make a pullback that we normally look for, another move higher, and then another pullback. You're like, well, yeah, you're just reading the stock, Dave. When I show this to you later, I'll tell you how I knew that this part was going to happen. And then at what I call the mid-morning reversal, this part was going to happen. I'll show it to you on live charts too. But again, this is what I call the active morning period. It is similar on a day-to-day basis, and then there are some days it's different. But what's very unique is when you look for the same structures, either price action or time-based action, you'll know if it matches what we typically expect. And when we get something that we typically expect, we can consistently make money. If it's something we're not expecting, we're looking for that too, because there are ways to trade breakouts higher or lower. Okay? All right, so this is a way we were trading. Again, I usually trade options. I was showing you this. This was the NASDAQ QQQ ETF, so we're watching the index. This kind of fall here, I'm trading with put options in some sort of underlying stock. I'm circled them here because I traded Netflix and I traded Priceline, and I traded it to the downside in both of these instances. I was also trading Google probably later in the morning with puts and calls. So right here we're trading about, I'm looking at my notes, seeing how many contracts. But if I'm trading anywhere normally 15 to 20 contracts throughout the morning period, we made roughly $12,000 trading, I would say, probably 4 sets of trades, okay, with options, 15 contracts, and making roughly anywhere from $600 to $900 a contract. That's the power of leverage. This is how we trade. We use highly liquid option contracts. Okay, definitely. Someone's asking, can you do $100 a day on average? Absolutely. I mean, right here we're talking about anywhere from $600 to $800 on trading 15 contracts. I have some people that trade 1 or 2, and they walk away $1,000 on this day. I have some that trade more than me. It's kind of scary sometimes, but they do. Okay. So again, we're going back to the different times of day. We have the active morning session I just talked about. We have the afternoon period. Now, what's interesting about the afternoon, and we don't actually cover this in the trading room because the trading room closes at lunch, but afternoon period usually is either a continuation pattern or a breakout pattern. But what we do is avoid the lunchtime doldrums, and then we either into the morning, or we just kind of go back and forth. And we know where the opportunity usually lies there in the afternoon, into the close. Okay? Again, here are the breakout moves, and then retracements, or if we're already moving in a trend-wise way, we're looking for that continuation move, higher or lower. Just if the trend in the morning is strong, lots of times we get a continuation move in the afternoon. Okay? This is a way that we traded the NASDAQ the entire day. This is the opening range right in this area. I'm sorry, I drew that wrong. Erase the ink. Okay, this is the opening range right here. We get a pullback into what I call the mid-morning reversal. Now, the mid-morning reversal is usually at the bottom of the opening range or the top of the opening range, and it reverses the general trend from the morning, and in this case the NASDAQ explodes higher. Now, I do have a momentum indicator that we use. I saw that you were watching MACD earlier, similar thing. So momentum's carrying us higher. See what this is? This is lunch. Okay? So at lunch, what do we get? Lunch going into a little bit of a pullback here, and then we find some support. Now, where do we find this support? Guess what? It's this price level right here, which I call the top of the opening range. I'm trying to give it all to you at one time, basically. So it comes down, bounces off the high price level at the opening range, and then what happens after lunch is we continue higher into, this is about 315, and we call this a late day snapback. And where do we fall back to? Remember the opening range right here? These price levels stay pretty consistent. So this is one example of the application of the everyday profit setups, and how price just moves around either based on price levels or timing of various times of the day. Everyday profits, if you've what's nice is this particular workshop that I run actually has a 12-page PDF at the time. It's indexed by time. So depending on what time of day it is, you just find that part of the index, you flip the page, and right there will tell you what to expect. Again, the range, pullback, mid-morning line, lunchtime pullback, consolidation, afternoon breakout, and late day snapback. Now I'm just describing it because it doesn't always happen like this. Sometimes here after lunch we go all the way back into the range. Here we push higher and then we have a late day snapback. And again, what you're doing is watching for patterns. I saw you had a session on divergences. Well, the reason why we broke higher at the mid-morning reversal, you had a divergence down here. Popped higher, consolidation move. You see the channel? Well, the channel breaks down here, finds support. Guess what? There's probably a divergence right in here also. Move higher, there's a divergence here at the turn at that 315 level, and there's the late day snapback. And you already know where it's going because of the opening range. Yeah, I think I'm getting a little ahead of myself. I see a lot of questions here, but again, I'm going to keep explaining. I just wanted to show you because this is such a pretty chart, and this chart is very typical for the markets. This is the entire trading day. Okay? Again, this is that, I know I circled it. I believe that that's a $1,800 move based, I know, this move right here, going higher into the 315 level. Basically, when we break higher off this double bottom right here, then we start to go higher. That's where this 210 call comes in on Tesla. All right. Somebody's asking, do I have to trade options? And the answer is no. You can trade individual shares of stock if you have the capital to do that. You can also trade this strategy, the one I just showed you. You see how that's the NASDAQ, the QQQs? You can trade the ETFs. You can trade the ETFs just as the ETF, or you can trade the options on the ETF. I go into that in the workshop, how to trade the options. Also, you can trade this in the NASDAQ futures. It moves just the same. You can do the SPY if you see the same pattern in the SPY. What's also nice is indexes tend to move together. Now, I don't want to use up too much of our time here with some explanation, because I want to show you the live charts. These charts are TradeStation. Okay, so let's jump right into the rules of great intraday trades. Know that the trading day has two distinct halves. It's like a football game. We have the morning session, the afternoon session. Honestly, my favorite is the morning. Okay, I can get most of my daily trading in the morning session. It's not that I don't find opportunity in the afternoon. It's just I tend to gravitate to the morning. I primarily like it is I already know I'm out of the market. I don't have to wait on a position if I happen to get in at 3 o'clock. I don't have to feel rushed and pressured, because I really don't like holding some of these positions overnight. Okay? Beware of the lunchtime lull. Stay away. You say, well, Dave, sometimes the markets move then. Sure, but let me put it this way. If you go out and you fish, usually you fish early in the morning or late in the day. In the middle part of the day in the hot sun, most of the time the fish aren't biting. You might get lucky once in a while and catch a fish then, but in the morning and the afternoon tends to be the best time, and that because of price movement and volume and interest. That's when you want to fish, that you want to do either the morning or the afternoon. All right? The one thing we strongly do in our trading room, we watch the indices for direction. If the indexes are just doing this, what do you think individual stocks that make up that index tend to do? This. I can't make money on just these tiny little wiggles. Okay, if the index is coming up, making a very strong double top, bearish divergence, and it's going to go down, well, I'm going to be looking for an individual stock that's going to make a strong move to the downside. Okay, I don't usually use the TICK or the TRIN, primarily because I'm using price setups as well as divergences or double tops or triple tops, head and shoulders patterns, but I'm also comparing that to the volume and the change in volume that we use. Okay, so we follow the indexes, and a good way to think about it is like this. The index, the overriding index, the S&P 500 or the NASDAQ 100, is like the tide, and you're in your boat. You can go against the tide or against the current, but it's going to be much harder going. If you want to go with the current, it is much simpler and more likely to propel you in the direction you want it to move. You want to watch the indexes and watch how they're performing. If there's a great amount of momentum, either bullish or bearish, in an index that your stock that you want to trade is following, jump on, because not only is the stock going to move, the index is going to push the stock to help it move. Okay? Match the index to the stocks. Okay? If you're trading a mining stock, don't be looking for necessarily the. I mean, that's not a bad example. That's not a good example. If you want to trade the Dow 30 and that's your index, and you're looking at a go-go small cap internet stock, your index doesn't match your stock. You want them to go together. But here's the good news. The vast majority of the time, the S&P 500, the NASDAQ, and to a general extent, the Russell 2000 move together. Okay? All right, so just watching the clock here, want to make sure we get enough time. When we're talking about range-bound trades, is that usually the markets make a set of moves and they move within a set range. I showed you that opening range. There are some days that all we do is move between the high of the day and the low of the day. You'll say, of course you're moving between the high of the day, Dave, but it's almost like there's a resistance level that the daily intraday price action stays below, and usually there's a price level that it stays above. Okay, so we tend to watch for divergences, reversals back into this. Lots of times it sticks in the opening range, and what we do is we watch three levels: the top of the range, the bottom of the range, and the middle of the range, and it goes back and forth. Okay, we'll look at that more later. So if it's range bound, we're looking for those reversals: single tops, single bottoms, double tops, double bottoms. Also best played as divergences. Okay, I'm not going to go into great detail and explain a divergence, but those of you that are familiar with it will be able to see that very easily. And then sometimes when we're reversing a strong move, then you have what we call a triple top or a head and shoulders pattern, or a triple bottom, an inverse head and shoulders pattern. And again, watching these setups with momentum, we call that, we have an indicator called MQ momentum, and it is extremely accurate at calculating changes in momentum and helping us catch those divergences. Right here is an example. Here's the opening range we were watching. Okay, after that period ended, we actually get a move lower. This is the first low. This is the second low. This is the third low. Momentum this whole time is going up. Actually, sorry, cut off my MQ momentum here. But what happens is triple bottom. Where does the triple bottom actually occur? Here. This is the low. See the box? This is the low of the opening range, and it shoots higher from there. Lots of times we use Fibonacci retracement levels, and that's where we go. We go to the 618 retracement. So again, this is the NASDAQ QQQs. This is the mid-morning reversal. Well, actually, I think it falls in this time here. But you can see the reversal pattern. It's range-bound. It pops up, and we're able to catch a move going higher. That particular move higher, this bounce, again, happened in the NASDAQ QQQs. What I do is I look for opportunities as dictated by the index. I see that the index is making a move higher. Guess what? I don't trade the index. I trade one of my primary trading stocks that happens to have a very similar pattern. Maybe it's sitting on support, so I trade price line calls. This particular one, I probably only traded 5 to 7 contracts, and we made $5,000 on that trade. Just that one. That one move at 10:30 in the morning, and that move probably took 10 minutes to happen. Okay, one trade, because Priceline is over $1,000 a contract, and there's the move. Okay. All right. So some other trade setups at work. Breakout trades. Let me see if they do it. I'm looking for a strong momentum break, and we actually have a very new indicator that is extremely good at doing momentum breakouts. If we're looking for a bullish, if we're breaking through a resistance level, you know, if we're trading like this and it's hitting this resistance level, we're looking for breakouts that do this with increasing momentum. Okay? Bearish, same thing. Here's the range, and it gets weaker, and then we break lower. That's what we're looking at. That's a bearish breakout trade. We got that this morning. Okay? Here's the same thing. Here's the opening range level. We pop out here after the range closes. What happens? You see how our momentum is carrying us lower, and then we get this break right here. We move lower here in the SPY. SPY on a 1 minute. Okay? That's a breakout trade. That's in the morning, again, from the opening range. All right, so next is the magic box. Now, you've seen this blue box on all my charts. All right, I'm not gonna. This is the part I'm gonna kind of move through a little bit faster because it's actually very well. It's a cornerstone of how we trade, and you'll see it in some of the charts that I show you later too. the magic box. It's the opening range of the market. It establishes a high price level. We call it the top of the opening range, and that's our natural resistance level. Okay? And this is just right at the open. It establishes a low price level. That's technically support. Now, you know, if you've been trading long enough, a price level that happens to be resistance, if we break through it to the upside, now it becomes support. A low price level, if we break that support level, it continues, now it's resistance. So it's kind of hard to explain, but you see here, this is the same trade I showed you earlier. Here's a triple bottom. It's the low of the opening range. What do we get? We get that inverse head and shoulders. You see, here's my momentum. See how momentum's going up? The slope of this line is positive. Histogram bars are red, getting shorter, and then they turn green. Here's the reversal. Again, this is the mid-morning reversal, AM. Again, you're like, Dave, how am I going to trade that? You can trade it with futures, the NQ futures. You can trade it with the QQQs. You can buy, you know, Apple as it's pushing higher with the same exact pattern. Okay? You want to respect these levels. Okay? The markets will come back to them time and time again. If it's range bound, play the price movement between the opening range high and low. If it's breaking out, trade it to that direction. If we break out of the box to the upside, guess which way you're going to tend to go? To the upside, and etc. Okay? Again, that's the same thing. Going back and forth, you can really trade this in both directions. That's what I'm trying to show you. 10 contracts of Google, you play a call, and then you play a put, 2 separate trades, nearly the same thing. You know, you make over $5,000 that contributes to this end of day kind of number. Again, this is just trading in the morning. Right? Here's a breakout trade. That's where you're trading in the downside direction. All right? Any more secrets? You see what I'm trying to tell you. Oh, the mid-morning reversal. Okay? Everyday Profits gives you a time range in which the morning reversals usually occur. Now, they're also matched to a general opening move, whether the opening move is lower and then catch a reversal higher. So it goes lower and then you catch a reversal higher like that, or is it relatively strong and then we pull back? This, again, all in relation to the opening range. But in order to make money, all you need to do is watch the opening range price levels, watch the prices in those levels, and watch the clock. Okay? Every day is different, just like I told you, routine. Okay? But if one of your clients calls you every day in the middle of the morning, you're always looking for that opportunity, right? So same thing, you already have your coffee, you're sitting down to do your work, you look at the clock and you go, hey, this is the normal time that Ryan calls me. I'm going to look for an opportunity, wait for his call, and there usually, give or take a couple of minutes, there's the call from your client. Okay? So it's a routine. You want to look for the middle of the morning for a morning reversals. Early in the afternoon, depending on how the prices are moving throughout the day, after we finish lunch, we want to look for a pullback or a continuation move on the breakout. How do you know the difference? Usually it's momentum. Okay? Usually, momentum is what's leading you higher or lower. If momentum is creating a divergence, guess what? It's a pullback. If it's creating a breakout and a continuation move, it's a breakout. And then usually you can look later in the afternoon. The one I showed you earlier was around 3 o'clock. That's an end of day snapback. Usually, guess what? Little tip. Lots of times on Fridays, those happen, especially if the market is relatively strong. It kind of pulls back. People want to take their profits before they close shop for the week. Okay? Okay, so again, mid-morning reversal. When I say morning, I'm looking at 9:30. Oh, I'm sorry, not for the reversal, but for the morning, 9:30 till roughly, I'd say 11:30, a.m. That's what I normally call the morning session. Probably maybe 11:30. That's a two-hour window where there's a lot of price activity. It could extend further out, and I usually don't do too much until about 10:15. Okay, we have to establish a general pattern in the day. Lots of times the first 15 minutes to 30 minutes, mostly the first 10 to 15 minutes, there's a little bit of chaoticness to the price movement, especially on an active day. Okay, again, this is the late morning, afternoon snapback. Lots of times it's on a Friday. Okay, this is just some touch points I want to just remark. 80% of the time, markets move together. I'm talking about indexes. Okay, indexes tend to move better. Some days you might have the small caps doing something different than the NASDAQ and the S&P, but not rare, not often. All right. Sometimes you'll have one index that is stronger than the other one, and then lots of times, especially if that index is the S&P, the other two will follow. Okay. Now, this is kind of important, and this comes through experience by looking at the market. Is it a back and forth seesaw kind of range-bound day? Or is there something going on with the market? Is there a really good report that came out, maybe economic, or the Fed comes out and says something like tomorrow, and it makes the market in a really good mood or really bad mood? Those are breakout type of trends in the indexes. When you see those, you want to go with the trend. Use trend following trades, breakout trades, continuation trades. Okay? If it's kind of a yawning kind of day, goes back and forth, that's important, because sometimes in the afternoon in the summertime or summertime trading days, that's what you get. But there's still ways to make money. Okay? So keep those things in mind when you're trading. I want to go back to the original question that I asked you at the beginning. Again, bringing home the bacon. Okay, you wrote down the numbers. A couple of people sent me the numbers. $114 a day. What would it be worth it to you to boost that by $50 a day or $100 a day? That actually works out to $10,000 a year or $20,000 a year extra. Now, I know if you have a job, sometimes it can be a little cumbersome, but if you're trying to make it a go at being a trader, is the fact that you can easily do this, and this can make a substantial difference to your trading income, okay, as long as you know what you need to do. All right, what would it be worth it to you to put an additional $10,000 to $20,000 a year into your pocket? Okay, now I say this and I show you this date because I created this Everyday Profits workshop earlier in 2015, and we did the first workshop on February 26th, a Thursday. One of my a little bit more experienced traders took this, understood it. The next day, he made more than the original price. This was an $800 program. We gave him a little discount, so he made well over $500–600 a day just trading in the morning this Everyday Profit strategy. I know this program works. I did this in February. We used this every single trading day for the past 5 months. Okay? 5 months. That is almost 100 trading days. We use it every day. And it's reflected right now in the fact that this special webinar offer, again, it's an $800 program. We offered it for $500 when it initially rolled out. This special webinar offer, we're going to do it for you for $297. Okay? You need to go to, I'm going to type it in here, valuecharts.com/profits. Isn't that a kind of a fortuitous link? And I'm going to put it in the chat box right now for you. valuecharts.com/profits. This special webinar offer, we're going to discount it further because The one aspect of trading we like to do at Value Charts is this. We like to take a proven program that we know consistently works well for our traders, give you a good price so you can turn around and rapidly make up that investment in the program and have a means to continue your trading education and building that trading experience. We believe in investing in yourself through the success you find in your trading. We don't necessarily think it's a great idea to keep dumping money into something that is not giving you a return, right? That's why we're investors. You invest something like this into this program, and it works to make your trading more consistent, easier, and streamlined, so you can keep adding more money to your trading account as well as increasing your potential profits, okay? Okay, so that is at valuecharts.com/profits. Let me keep showing you a couple of extra things. All right. Here is some hold on one second, I apologize. Okay, there we go. I hearing some sounds in my ear. I apologize. I thought that was me. All right, so again, on this particular day, we had a successful trading day. Let me see. We were trading on average. This one's telling me it was 20 contracts. Some days it's 15, some it's 20. It just depends on the accounts that I'm trading. So that we made roughly on this profit. These are different trading days. Roughly 630 a contract on this day. This one is 625. $625 trading 20 contracts at a time on average. This one is $664 a contract. Now you can see we tend to be extremely consistent in what we're trying to do. Again, I have traders that come in here, they trade one contract, two contracts. Don't be overwhelmed with this big number, because consistency in your trading leads to whatever number you want in this chart, okay? These are just the account sizes that I tend to trade. Okay? Again, the special webinar offer really is a very strong discount from the normal $500 everyday profits price. Again, that's even discounted from what it was originally. But the special webinar offer today at valuecharts.com/profits is $297. Now, what I'm going to do, I'm going to keep going here because I know you want to see some of our intraday. What is the cost of one contract? Thank you, Gary. Good question. The normal size contracts that I trade that are not including Priceline, something like Google or Tesla, or previously before the split, what Netflix used to be, Apple, and what we are talking about is an option contract that is anywhere from $8 to $10 to $12. Now, those of you familiar with option contracts, you know you need to multiply that number by 100. So you're talking about $800, $1,000, $1,200 that you're making money. So it's pretty nice if you spend a $1,200 to buy a contract and you make $600 on it. You know, it's a 50% return. Again, we're not going to talk about trade sizing or anything like that, but still, per contract, you're making $500, $600, and maybe you're not that good, or you're still learning, or you're still experiencing. You still have the very good opportunity to pull $200, $300, $400 out of some of these trades, and they work. And I'm going to show you, especially today. Okay, and I didn't pick the day to do the webinar. It just happens to be that way. All right, so again, 297 is what we're looking at. Again, the question I asked you earlier, what would it be worth it to you to increase your, I mean, $100 a day, folks, $20,000 a year. I'm showing you trades here consistently making $300, $400, $500, $600 per contract. Okay, you guys can do that. Intraday trading done right, with the right perspective, with the right patience. It's almost like have you ever been in a trade and you're trying to get in and you're just not sure? You're like, I'm not fast familiar with the setup. I'm not sure if I can pull the trigger. How about, oh, I think this is going to work, or I think I see a breakout, but I'm not quite sure. What if I gave you the map that said, hey, look, if it's above this price level and it's this time of day, do this. And you have a 12-page PDF that basically tells you, what time of day is it? Oh, it's 10:45. Okay, we'll turn to that page, look for these particular patterns, look for these particular trades. It's pretty simple. And I think that's the biggest feedback I got on my workshop when I did this the first time, is that it is so consistent and it's right there. Okay, so again, everyday profits for you today, $297. Look at the contract that I got. You're asking what is, okay. Somebody asked about the cost of the options.
Hey, Dave, I don't mean to interrupt,
right, so
but we are
go,
at the end of the 45-minute presentation time.
Ah, I see. Okay. Well, you guys did get to see a lot of the opportunities there, so I hope you take it and run it. Thank you very much. I didn't realize that I was kind of going over, so I appreciate it. I'm going to leave this up for you. Again, valuecharts.com/profits. And again, the consistency of the trading this particular strategy is really amazing. If you can just give me one quick second, this is what I really wanted to show you guys because it was quite impressive. I know I'm right up on it here. I apologize. You can see the valuecharts.com profits here at the very end. But look, all right, this is the opening move in the NASDAQ. This is a 250 tick chart. Look, guys, inverse head and shoulders pattern right here. When mid-morning reversal, we go from down 1% and we run up on schedule reversal continuation pattern down 1% till about 2:30 in the afternoon. Now we're up 1%. That is a 2% move in the NASDAQ index. Now, I know for a fact there were several NASDAQ stocks that took that ride, and you're talking about a 4 to 5% return on the stock. You can imagine that was probably close to a 150% return on the options themselves. I know because I traded QQQ call options from this bottom all the way to the top, and it was great. So again, this type of trading works on a very consistent intraday basis. I hope you give it a shot. One thing that Value Charts does offer is if for some reason it doesn't agree with you, you have we will absolutely take care of you. You know, let us know and we'll take care of you. But right now, special webinar offer, really good discount. $297, valuecharts.com/profits. And thank you guys very much for the opportunity to speak to you today. And thank you for the organizers. I'll go ahead and turn it over from here. Thank you.